Okay, so what we're going to be covering is we are going to, let me get this share up here. All right. We're actually completely out of Unit 1. We're actually into Unit 2 now. So let me get this here. There we go. And sharing now. There we are. All right. Accounting periods and methods. All right. Like the graphics, trying to make them look like exactly what we're covering. So we're covering accounting periods and methods. All right, and it's pretty straightforward what we're going to be covering. The unit is based upon primarily just what a tax year is and what happens during that tax year and how we go about identifying what happens specifically during that year and then the accounting methods for it. So it's the differences between a calendar year and a fiscal tax year. So the key reading is there are two publications. Publication 334, it's the tax guide for small business. It has all of the guidelines that you really should be covering. And publication 538, accounting periods and methods. Those are two that I realize the reading's a little dry, but really you'll get a lot out of them if you go over those two. Okay? And they're really detailed and they have a lot of information, especially the tax guide for small businesses. That one covers a lot of what we're covering, the tax structures and all. It's a really important one. If you go through it, you'll know a lot of what we're going to need to know for the test. All right, now key forms. There are really a few key forms. It's not too much that you need to know in regards to what's on them, but mainly what they're used for. Okay, so let's go into them. Form 1128, this is what the application is to adopt, change, or retain a tax year. So by adopt, it means you're going to form a new one and take that as your tax year. So you're going to say what your tax year will be if it's a calendar year or fiscal year. Change it, which means if you currently have one, like you currently are on a calendar year and you need to change it to a fiscal year, or you're on a fiscal year and you need to change it, that's usually what happens. You're currently on a fiscal year and you need to change it to a calendar year. That is the form you would use to change it from the fiscal year to a calendar year. Or retain a tax year, which means, let's say you acquired a new company and you're going to take over ownership and you're going to change the corporation a little bit, but you need to retain the current tax year that it has. So you need to file the 1128 with it to keep that current tax year in place. The form 8716 is the election to have a tax year other than the required tax year. So in other words, there are certain companies, and we'll get into this a little bit, that do have a required tax year, so that it has to be like a calendar year. And in this particular case, you may need, for whatever reason, you may need to have something other than the required calendar year, and you need to get a variance for it. So you have to send in the 8716 to get that change from the calendar year or from the fiscal year to something other than the required tax year, and you have to get an exemption for it. And then the final one is the form 3115, and that's if you're going to change your accounting method. And we'll get into that. Remember, there's a cash method, there's an accrual method, and if you're going to change it, you need to report that to the IRS. And so if you're going to go from a cash method to suddenly an accrual method, or more importantly, from an accrual method to a cash method, you need to indicate that to the IRS, and you have to submit the form 3115. All right, so those are the three important forms. All right, so let's get into this just a little bit. All right, the tax year. Tax year is really easy. There's only really two types of tax years. All right, the first one is simple, It's calendar year. Okay. Second one is the complicated one. That's the fiscal tax year. That's where it's not based on the standard calendar year. So the calendar tax year, very simple, January 31st to December 31st. There's no variance from it. It's based on our regular good old-fashioned calendar year. Now, the other one, this is where you can have all kinds of variations. A fiscal tax year, and these are the rules for it, and these are the rules you actually need to know because these are what you would be tested on. Okay? Now, a fiscal tax year, this is important, is generally 12 consecutive months, and it ends on the last day of any month except December. Because again, if it's ending on December 31st, it would typically be a calendar year. So if you see something that's ending on December 31st, you know, pretty much is not a fiscal tax year, it's a calendar tax year. So, quiz question. If you got a bunch of dates on there that say you are, pick, you know, which is a fiscal tax year, and one of them says that it's from January 31st to December 31st, could that be a fiscal tax year?
No.
Nope. Can't be, because it's on the last day of December, because you know that that's based on the calendar year. Okay? Now, that is generally 12 consecutive months. There is one exception. The one exception is they do have a form that is a 52-53 week tax year, and it's for businesses that choose to end on a particular day of the year. Let's say they, for whatever reason, their tax year goes until the last Friday of June. For whatever reason, some do this. Now, if you figure that out, you know, like it's the last Friday in June, it's not based on the last day of June, it's that particular day. It's kind of like, let's say you're going to end on Thanksgiving. Okay? Thanksgiving, the day of Thanksgiving changes every year. Christmas doesn't change, it's December 25th. Okay? Halloween never changes, it's October 31st. The Independence Day is July 4th, that sort of thing, right? But Thanksgiving is based on the third Thursday, basically, or the last Thursday, however you want to look at it, in November. So its date actually changes every year. So it's never the same day. Ironically, I think this day it is November 20th, which will kill me because that actually also happens to be my anniversary. So my wedding anniversary and Thanksgiving will all fall on the same day. So it's going to be a wild day for me. So that one, you know, or Labor Day. Labor Day is a good day. Labor Day is that Monday in September, you know, the first Monday in September. Memorial Day is, what is it considered? The first Monday in May? Is that the way it goes?
Yeah, May.
The first Monday in May. Okay. So those are variable holidays. Okay. They're not really set on a day. They're set on a particular day of the month. Okay. They're not on a date. All right. There are some businesses that, ironically enough, for whatever reason, and honest to God, offhand, I cannot think of a reason why, they fall on a particular day of the year. And so when they do, they have an exception on their fiscal year because it throws the calendar off. And so they actually have one year as a 52-week one, the next year is a 53-week year. Okay, because it doesn't balance out unless they do it that way, to have that day as their last day of the fiscal year. Again, like I said, offhand, I cannot think of a reason, or I can't even think of a company offhand that does that, but it is one allowable by the IRS. Okay, so that is the one exception to a 12-month fiscal year. Okay, everybody understand that one? It's just an oddball one. It's the one exception, and know that it exists, but that honestly, I can't see for any particular why. It's kind of like saying I want my fiscal year to end on Thanksgiving. You know? So yeah, so it's one of those oddball ones, but it does exist. All right. So next one, a short tax year. Now, this is what happens when a tax year is less than 12 months. It is known specifically as a short tax year. It will happen when you first start a business or end a business. And the reason is because I'm starting it up and I'm having a calendar year again. Even if it's a calendar year or a fiscal year, it doesn't make a difference. It may be less than 12 months. Okay, because I'm ending it like I start the business in June. I'm on a calendar year. My first year will be a short tax year. It'll be from June to December 31st. Okay, whatever day in June I'm starting the business till the end of the year. Now, there's an important part of that though. Even though it is a short tax year, I must file as if it's a full tax year. Okay, so no matter what happens, I have to treat it just like it's a full tax year. So I have to file quarterlies. I have to file my withholding tax, that sort of thing, just like it's for the remainder of the year. So even though it's June, let's say it's, let's actually go a little bit different than that. Let's just say it's in July I'm starting it, so I don't have to think about June quarterlies. Let's say I'm starting in July, right? What do I have to file in September? Think about it.
Estimated tax payment.
Thank you. Garrett got it. Estimated tax on September 30th. And then what do I have to file on October 15th?
The extension.
No. Or business, no. Business.
Abby's.
Remember what's October 15th to a business? You got it right. You got it right in a sense. Remember, October 15th is what for it. It's not the extension, but what happens for a business. Third quarter. You have the third quarter reporting. Lisa is awesome. See, did you hear that? All right. Third quarter reporting. All right. So now, again, now it comes up to December 31st. What am I doing? I'm paying what?
Estimated tax payments.
For fourth quarter. Correct. Fourth quarter. And it's January 31st. I got a whole bunch of things going out. What am I doing?
Quarterly.
Reporting my fourth quarter earnings and sending out
W-2s.
W-2s, 1099s. You got it, guys. Listen to you guys. You guys are awesome. You hear that? I am so proud of you. That's what I wanted to hear. That's the kind of confidence I know. All right? Because even though it's a short tax year, that's why I made it past. I said, oh, let's see. Here's a better question. I started June 15th. I said we were starting this in June. I started June 15th. What happens June 30th? Yes, you got it. I still have to file my quarterlies even though it's only for 15 days. I still have to file my estimated tax, my quarterly reports and with quarterly earnings for the second quarter, even though it's only for the 15th to the 30th, I still got to file for those 15 days. What does that mean on September 15th? What do I have to do?
Estimated tax again.
I have to do the report for it. I have to do my quarterly earning report on September 15th for the business to my shareholders because even though it's only 15 days, I have to treat this as if it's a full tax year. So even though it's only a short, if I'm before whatever's coming up, I have to remember those deadlines. Okay? I have to remember those deadlines. Even though it's a short tax year, I still have to meet all of those deadlines. So I have to go insane and not have any prep time and go, I started this business on June 15th, and now I need to literally by June 30th report I have to pay my estimated tax, and by September 15th I have to, and what else do I have to do if I've had on June 15th I'm starting my business, right? What if I'm a casino? What's the one form that casinos have to deal with all the time?
I
'Cause
can't remember the form, but it's for the transaction of $10,000.
Oh, you are so good, Lisa. It's an 8300 form. I love you, girl. That was awesome. Because no matter what, that form counts as, 15 days you got to report it. And the important thing is you have 15 days to report any transaction. So even in June 15th, you had a $10,000 transaction, even though it's your first day of business. By 15 days later, you have to report it. And within 30 days, remember, here's the other thing, is within 30 days, if there was a mistake, you have to fix it. Those are the 2 dates for the 8300 form. And I'm going to give you a whole list of the forms and what their deadlines are. So don't try to remember that right offhand. Okay? I'm just reminding you of it. Okay? So don't fret over it. Don't worry about that. But just remember, no matter the short tax year, you kick in, don't start one on June 15th. Okay? Do not start one like 15 days before the end of a quarter. Okay? Not comfortable. Don't start a company right before the end of a quarter. Hey, Sheila, how's it going?
Okay, just came back from the physical therapist.
How are you feeling?
Beat up, but other than that, just fine.
Oh, I know how you're feeling. I was with the trainer on Monday and the chiropractor on Monday, and my back feels like basically somebody took a baseball bat to it.
Oh my.
That's okay. And then yesterday I was working at the office and trying to help Mike move some stuff around. So, my back feels wonderful. So anyway, so if it wasn't for painkillers, I'd hate my back right now. So I understand. So anyways, let's get back to this.
Mhm.
All right. So remember, a short tax year, no matter what, you have to treat it just like it's a full tax year. So you have to meet all the deadlines, and you must file just as if it's a full tax year, even though it's a short one. And the same holds true even if you're closing a business. So even though you're closing it, you have to treat it just like it's a full tax year. So even though you're closing your business, let's say you're closing your business on, let's say June or July 10th, right? July 10th, you're closing it. What do you still have to file on June 30th?
The
Come on, you got
quarterly.
your quarterlies. Correct.
Well,
You
that
still,
wouldn't be due until the 15th of the following month.
right. Well, you wouldn't have to report it, but you have to do your estimated, and all for your deadline. That's your deadline for the quarter, is the 30th. But like I said, you have to treat it as if it's a full tax year, no matter what, even though it's a short tax year. Okay, and that's the only time they would really occur is if you're either starting or closing a company. All right, now the adoption of a tax year. Okay, what that means is a company adopts a tax year when it files its first income tax return. So it'll decide at that point if it's a calendar year or if it's a fiscal year and what its fiscal year is. All right, so they're going to decide what period their fiscal year is, if it's going to be that one rare case where it's a 52-53, which is, like I said, that's the one exception for a fiscal year that's really strange, and that's because they want to end it on a particular day of the year. And that's when they adopt and specify what it is when they file their first tax return. And the one thing is when you do adopt it, it then becomes your actual fiscal year, or your tax year is then set unless you officially change it. And any business, now here's the important thing, any business can choose a calendar year. Okay? Anyone can choose a calendar year. But there are restrictions on what can assume a fiscal year. All right? Now, you are required to use a calendar year under certain conditions. So in other words, if you have certain conditions, you have to use a calendar year. You cannot use a fiscal year. If first, it keeps no books or records, okay? It has to use a calendar year. So what is the first one you can think of that doesn't really have to keep books or records? What's one type of business that doesn't have to, more or less, keep books or records?
A church.
Thank you. All right, Sheila. See, I knew there was a reason she came back to remind me. A church, you know, a church. A church doesn't really, a church can elect to keep the books or records, but they are not really required to keep books or records. Sometimes the church members are, you know, they are really fanatical or whatever, and they demand to say, oh, okay, I want to see it every week or every month. I want to see records. And so you have to keep records of everybody who donates, what is unaccounted for. In other words, I shouldn't say unaccounted for, what is unassigned donations. So those are the stuff that comes in like the collection plate where you don't know who it came from, plus who donated checks, who actually put the checks in, who made donations through credit cards, who, you know, and so you can track. So at the end of the year, they can get their donation receipts. There are some churches who do accounting of that method. And at the end, and everything that goes out, every donation that goes out for every amount and every expenditure and everyone who works for it, and they might as well be a business. And every expenditure, and there are other ones who keep general records like categories, which is the most common one, like saying for office supplies, it just falls into that category. They don't keep detailed records for the church. They just say office supply or office staff, that sort of thing. You know, if somebody worked for a short time for them and did some work for them, or they will have categories or donations made. They will just have donations by check, donations, contributions to the church, or if they made donations out, the church will not keep detailed records or books. So that's one that is required to use a calendar year as a result. Can you think of any others that may be that way? I can think of one that really shouldn't be that way, but does usually end up that way. It's a sole proprietorship. What ends up happening with a lot of the guys who are doing businesses, do they keep detail records? Or do they kind of keep general records? You got a guy who's a contractor. Does he keep really detailed records, or does he keep kind of general records saying, well, here's from what my tools were, and here's about what my utilities were, and that sort of thing? Even though he's really shouldn't.
Yeah.
Even though he really shouldn't. Okay, let's put it that way. Is that usually how they do it? You know, I mean, when we think about it, you know, the guy who's putting in your bathroom, okay, is he keeping detailed records as to what he spent and everything, or is he going, well, it was about this much? I took the guys out to lunch, and we spent about $50, and we did this, and I took about $100 out. I needed some spending cash. I had to get some gas for the truck and a couple of things like that, and so kind of worked out to be about this much. Is that usually how it would go when you think about it?
Well, with my experience as a bookkeeper, no.
Well, I know, but unfortunately, it's like for a lot of them, that's kind of how they end up coming in when they have their taxes. You know, when you're on the book, when they're actually doing, it's kind of like when they're coming in to have their taxes done, it's more like they're doing their own bookkeeping versus, you know, that's kind of how it comes along.
Sure.
But, you know, I mean, when you're doing the bookkeeping, honestly, when you're a bookkeeper doing it, they keep the detailed records because you're doing it for them. But when they're doing the general ones, you know, they're just going along and they're trying to keep their own records, comes in a shoebox, you know, kind of thing. They threw their receipts in there, even though they shouldn't. That's usually how it happens. So they really should be, and really pretty much are required to be on a calendar year. The next one is there is no annual accounting period. The IRS stipulates that they don't have an annual accounting period. I can't even think of a case where this would be. Anybody can think of one where there's no actual annual accounting period? Because usually there is, no matter what. Because you're stipulating, is that accounting period? So
I guess if you started and ended a business in the same year, then there might not be
okay,
an
there might not be,
accounting
and that's it.
period.
That's actually good. Thank you. Because I could not honestly think of one. I could not think of where you would not have an annual accounting, but yes, I guess that would qualify in that sense. So yes, that would probably be the only if you started and ended it in the same year. Yeah. So a calendar year would probably apply then. There are some cases, now this is really strange, where the present tax year does not qualify. So in other words, there have been years, and this is, again, it has happened sometimes during World War, during the Vietnam War. I think they actually did not let some business, and the reason is the IRS was taxed so much labor-wise. They didn't have the labor force to go over a lot of tax returns and whatnot, that they actually disallowed fiscal years during that time period. There were certain times when they did not want fiscal calendar years because of the complication. Certain tax years where things were too complicated to allow it. So it was more or less grandfathered in for businesses that already were in it, but basically this is for new businesses coming in. They didn't allow new ones to adopt a fiscal year versus a calendar year. And that was just because of whatever was going on during that particular year. And it was specified by the IRS. Okay. And then finally, the last one is the most obvious reason, and it's the IRS code of regulations require the use of a calendar year. So in other words, if you look at the small business guide, they specify certain businesses themselves that they say, no, you have to use a calendar year. And they just have their own set of codes, which just say, in general, we're not going to allow this one, this one, and this one to use a fiscal year. You have to use a calendar year. And for that, they just need to check the small business guide and look to see if they fall into that category. And that category will change all the time. The IRS has free reign to decide if they will allow it to adopt a fiscal year or not. So those are the only conditions that are, and they're pretty broad if you think about it. They're required to use a calendar year. That's why a calendar year is acceptable by every type of business. And only some of them are allowed to use a fiscal year. And if you fall into any of these categories, you have to use a calendar year. All right.
How about those businesses that are seasonal?
Seasonal businesses.
Like Halloween. That's,
Spirit store.
yeah.
Turns out the Spirit store is actually an annual store because what it is they actually run their business year round because they have year round staff, and they're just like us, okay, like Jackson Hewitt. We are seasonal, but we keep our business running year round. They actually keep their purchasing departments and their warehousing open year round. And so the Spirit store is there. They have their, the other branch is their leasing department, their real estate one, because they are currently always going around to get their new locations. So that part, their purchasing, their leasing, and their marketing departments are always working year round, and they're warehousing, working year round to get all their stuff ready for the Halloween season. The only thing that they hire typically during their actual season are their front retail staff. That's who comes along during their season itself. For us, most of our staff is their front staff. The ones that we keep year round are for us, like I said, we keep very little staff in the off season. Most of our staff comes on just November, December, January, February, March, April, and then we go again to the off season. And we only keep our maintenance staff, our training staff, admin, that sort of thing for us. But we are on a calendar year in that sense. So we don't open or close. But as for one that's, I guess there is one I can think of would be like the fruit. I'm trying to think of the fruit picking, seasonal harvesting, because those groups are only during the harvest season, and they don't have anything in the off season. The farmers themselves and all are doing their own thing, and they just come in and do just the harvesting part. In most cases, in their case, they're not actually a business. What they usually do is they 1099 the harvest crew. So they are working for the farmer, and the farmer gives them a 1099 for their period that they're working. So they will fall under the whatever the farmer has set up, usually a farm, and they get the 1099 from that. All right. The forms themselves, that's what I wanted to go over here next, is the forms themselves. Now, what I was trying to think of is when you would not do this. Let me pull up the form I have here. I was going to show this to you. This is the adoption form, because you do need to understand this one. The 1128. Way too small. Okay, why is that not coming up? That's why. All right. All right, let me stop this one and go to this one. All right, this is the form you will need to understand, because this is what you need to file with your first tax return to assume the tax year. It needs to indicate the type of business, if it's an individual, partnership, estate, whatever the type of business is, the ending date, Now, this is if you're going to adopt it. This is going to, again, like I said, this is when you first form the business, the type of business, the year ending date, and the type of business method, and the nature of the business, and all of the signatures. If you are changing it, you have to put the information in here, the type of business, the change to a year ending date. You then have to, if you are going to, you have to use a different form. Again, you have to just indicate there, because there is change for a different accounting method, which is a different form. So you have to indicate your current accounting method. And you cannot change it on here. You could just have to indicate the one you have, the nature of the business, and again, submit it. And then if you're going to retain it, now retain it means if you are buying a company and you are then putting it under a different business, like it's going on, you're buying it up, you're going to put it under your corporation, and it is now going to retain its year ending date, like we were talking about originally. Let's say you're under a calendar year and it is under a fiscal year, and you are under that calendar year, but you're going to have it retain that fiscal year. You have to indicate you're going to retain a year ending date and indicate the date here, and then have it signed and submitted. That application, again, like I said, the fiscal year is pretty simple in this case. Okay, I got somebody at the door, just what I need. Can I have you guys hold on for 1 second? I got somebody at the door.
Yes.
Hold on for 1 second.